Okay, so now we're going to look at a question that's going to look at double entry. So we're going to look at Michael Green, and I'm sure you're fed up of everybody telling you, but when you do a question, the first thing you should do is to come down to the requirements and see what you actually have to do for the question. So in this question, we're required to record the transactions in Mr. Green's ledger using T accounts and balance the ledger accounts at the 14th of January 2013. And then part B, we need to extract a trial balance at the 14th of January 2013. So as you can see, I've kind of gone through the question and I've just highlighted a few things. So I've highlighted in the requirements, that I need to use T accounts. I need to make sure that I extract my balances at the 14th of January 2013 and that I create a trial balance at the 14th of January 2013. And then up at the top, I just highlighted the fact that Michael Green is an architect. So that's just the type of business that he's in. So his sales obviously would be architectural services. And then the date that the business is commenced. And you'll see as we go through the solution, I've actually highlighted items throughout the question just to kind of remind myself what I'm doing. So if we look at the first transaction, on the 1st of January, Mr. Green invested €100,000 cash in the business, which was lodged to the bank account. So if you remember from the slides that we discussed earlier, I kind of told you to learn your bank by itself. So with regard to our bank or cash account, you'll remember that a debit is for money coming in and a credit is for money going out. So in terms of this transaction, we have €100,000 in cash coming into the business. So it's coming into our bank account, so it's going to go on the debit side. And we also need a corresponding credit. So in this case, it's the money that Mr. Green has invested himself, so it's the capital that he has put in. So we're going to set up a capital account, and our corresponding credit of €100,000 is going to go into our capital account. And just a few kind of notes for yourself when you're doing this. I still do it and I'm in college, so when I would be doing a question with double entry, at the top of the page I would write credit on the right hand side and I would write debit on the left hand side, and it just would save myself from having to constantly be checking to make sure that I'm putting it in the right side, because eventually you'll just come to learn debits and credits off, and it's just a little reminder when you're in exam and you're under pressure. Also, when you're doing your T account, you would use the date, and as your descriptive you would put in the account that corresponds to this transaction. So in this case we know that our €100,000, the corresponding credit, is going to be in our capital account. And likewise, if you look at your capital account, you'll realise that the corresponding debit is going to be in your bank account. So now we'll look at the next one. So also on the 1st of January, Michael Green bought motor vehicles for cash for €40,000. So like we discussed with our bank, it's paid for cash. We know that it's actually been spent, so it's money coming out of our bank account, so it's going to be a credit. So we have 40,000 on the credit side of our bank account. And we're going to set up a motor vehicle account where our corresponding debit is going to be. And as you remember, this makes sense because our motor vehicles are an asset to the business, and assets go on the debit side of the T account. Then we have on the 1st of January, Michael bought furniture and equipment for 20,000, and you see that I've highlighted and underlined on credit. So unlike the last transaction, we won't be touching our bank account at all. And if you were a little bit confused, my way of thinking about it would be, well, furniture and equipment is an asset just like my motor vehicle. So if you know that your assets from your motor vehicles have a debit balance, then your furniture and equipment is obviously going to have a €20,000 debit balance. And then you know that your corresponding credit is not going to your bank this time. It's going to go into a creditor account. And if you remember from the slides, a creditor is somebody to whom the business owes money. So the business needs to pay for this. And just take a little note that it's actually not a trade creditor, because this furniture and equipment has nothing to do with the architectural services that are provided. It's not, raw materials or supplies that's coming in to enable him to do it. It's actually an asset of the business itself. So that's why it's an other creditor account. Also on the 1st of January, Michael paid for rent of premises, €2,000. So we know that it's paid for. So we'll start off with our bank. So as we've discussed many times, money coming out of our bank account is going to go on the credit. So we have €2,000 on the credit of our bank account. And the corresponding debit, we're going to set up an expense account for our rent. So it's €2,000. And if you remember from our notes, debits are also for expenses. So we're actually increasing the expense under our rent account by €2,000. On the 3rd of January, Mr. Green withdrew €500 from the business bank account for petty cash. So yet again, taking money out of our bank account, we're going to credit our bank €500, and we're going to debit our petty cash account €500. Now our petty cash account is actually still an asset. The business still has this money, it hasn't been spent. This is why it's a debit balance. And not only that, but you're going to treat your petty cash account the same way you would treat your bank account. So in other words, money coming into your petty cash is going to go on the debit, as we've seen here, and money going out of your petty cash account is going to go on the credit. Then on the 5th of January, Michael paid advertising €1,420 by cheque. So let's start off €1,420. We know it's coming out of our bank account. It's been paid. I have it highlighted. So credit our bank account €1,420 and set up a T account for your advertising expense and debit €1,420. We're increasing that expense. Motor tax was paid by €900 by cheque. So we're going to credit our bank account €900 because there's money going out of our bank. We're reducing the amount of capital that Michael has invested. And we're also going to debit our motor tax and insurance account. So we're creating another expense account and we're increasing it by €900. Then on the 5th of January, Michael provided architect services to a client and he sent an invoice for €5,000. So as you remember, Michael is an architect. So that means that these architect services are basically his sales and his revenue. So from our slides, we remember that an increase in sales or an increase in revenue is going to go on the credit. So we open our sales account and we put €5,000 on the credit. And this invoice wasn't paid until February, which is the most important thing to remember. So we actually haven't received this cash yet. So we can't actually touch our bank account and put €5,000 on the debit. So we need to create a debtor account. And as you remember from the slides, a debtor is still an asset because it's somebody who owes the business money. So we open our debtor account and we put €5,000 on the debit. We just label it sales. You could also put in the name of the client in there as well. You could have sales and you could say D Black. And sometimes if you get confused with your sales account and you can't remember which side your sales go on, I would always think in terms of my bank account. So obviously if a company has sales, it's actually going to be getting money in. So as you remember, when we get money in, it goes on the debit side of our bank account, which means that the corresponding credit must go on the other T account, aka your sales account. And we kind of have an example of this here. So Michael received a cheque of €3,000 from El Faro for architectural services provided. So architectural services provided, we know are sales, but we also received a cheque of €300. So as you'll recall from our bank account, debit, we get money into our bank, and credit, we're taking money out of our bank. But this time, we're getting money in. We received a cheque. So €3,000, debit your bank account, and we're going to credit our sales account, €3,000. So we're increasing our sales are now €8,000. Then on January 11th, we bought stationery for €300 by cheque. So yet again, it's money coming out of our bank account. We know it's been paid by cheque. So the 11th of January, stationery, €300 on the credit of our bank account. And we're going to debit the stationery expense account, €300. We're increasing the expense that we paid for stationery. Then on January 13th, Michael paid €100 from petty cash for petrol for motor vehicles, and he withdrew €300 from petty cash for his own use. So petty cash we're going to treat the same way as bank. So cash coming in is going to be a debit, and cash going out is going to be a credit. So in this case, paid €100 from petty cash for petrol. Obviously, that's cash coming out. So we're going to credit our petty cash account, €100, and we're going to debit our petrol account, €100. So we've created another expense. Petrol was paid for. And then drawings. So drawings is money that an owner will take out of a business for his or herself for their own use. And they're not reducing the capital or the money that the business owes them. It's just an expense of the business. So we'll see we have €300 credit because there's money coming out of our cash account. And then we're going to debit €300 to our drawings account. So as you can see, we now have our full set of ledger accounts. So now the next step that we need to do is we need to balance these accounts. So basically the way to balance them, kind of like it suggests, as you can see on the debit side of our bank account, we have €103,000, while on the credit side, we have €45,120. So we need to get both sides to be €103,000. So basically on the credit side, I need to put in a balance carried down of €57,880. And then you'll be able to see both sides balance. But then I need to bring this balance down over here on the debit side to 57,880. So basically you're just adding in the amount you need to balance the side that is less, and then bringing it down on the opposite side. So in this case, bringing it from the credit to the debit. If we do our capital account, we'll see that we have €100,000 on the credit and we have nil on the debit. So I need to put in a balance carried down of 100,000 on the debit. And then I need to bring this balance down on the credit side of €100,000. Then with my motor vehicles, so I have a balance on the debit of 40,000. So I need to put a balance carried down on the credit of 40. And then I need to bring this balance down on the debit side of 40,000. With furniture, I have 20,000 on the debit. So I need to put a balance carried down on the credit of 20. And then I need to bring this balance down on the debit side. And basically, that's the exact same step that you need to do for every single account. You just need to balance them and then put the side that is lesser as a carry down and then bring it down on the opposite side. So you can see we've done it for other creditors, done it for our rent account, our advertising. And now the next step we need to do is we need to take all these balances and create a trial balance. So as you can see, I've actually highlighted all my balance brought down. This is because when I'm creating the trial balance, it just saves time. It means that I just literally have to look for the highlighted figure, and I know that my bank account in my trial balance has to have a debit and it has to be 57,880. So if we just look at our trial balance. So very important when you're doing questions, make sure that you write out what it is. So Michael Green trial balance as at the 14th of January 2013. So we can see we have our bank, which corresponds to our ledgers of 57,880 on the debit. Our capital is €100,000 on the credit, as it is over here. Our motor vehicles, 40,000 on the debit. Furniture, 20,000 on the debit. Other creditors are 20,000 on the debit, they're just here. Our rent is 2,000 on the debit, just up here. Advertising, 1,420 on a debit, because it's an expense. Motor tax and insurance, again an expense, so it's a debit of 900 and a debit of 900 over here in my trial balance. Sales are a credit of 8,000 and I have a credit of 8,000 on my trial balance for sales. Debtors, I have 5,000 debit and I have a 5,000 debit here on my trial balance. Stationery, I have €300 on a debit because it's an expense and I have €300 here on a debit. My petty cash is €100. And it's a debit because it's an asset. I still have this money and it's up here in my trial balance. Petrol, I have a €100 expense on the debit and drawings €300 expense in the debit, and they're both here. I hope you found the tutorial helpful and I hope you can practice more.